All right, what is going on, Discord and YouTube family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Tuesday, September 30th, 2025, year of our Lord. And yet again, we'll be breaking down the S&P 500, NASDAQ, Dow Jones, and oh yeah, they're just those three. I mean, I could do RTY and stuff, but we're good with these three. But I didn't trade any of this today, right? Like I took trades on gold last night, took the shorts, and then I had a ton of things to do today. So I didn't even make it back to the charts until almost 3 o'clock. So, but I always, for documentation purposes, for journey purposes, I always try to make sure I make a pre-market plan how I would have traded the market. And if anybody wants to follow it, they're more than welcome to follow that as well. The plan, statistically speaking, is about 87% positive, right? So it's been back tested. I've definitely done my research on my plan. So that being said, yet another review of how the plan played out and how the ways that you could have traded it. So first we start over here in our gray box. This is my macro. So this kind of gives me a definition of exactly how I'm viewing price. And then these other boxes tell me exactly what I want to do when price hits certain areas. Again, this plan is put out an hour and a half before the market even starts. If you guys are interested in joining the Discord link is in the description down below. Now let's get right into it. So bullish retrace of a bearish liquidation. So we've been in this retracement since we had this liquidation. We talked about this liquidation not really being much of anything because of the fact that it was unable, right? It was unable to bring new lows, right? If something is unable to bring new lows, that means the highs are weak, right? So what is the market doing? It's going to target this liquidity high up here, but of course it's going to make itself look bearish on the way up. We say it's making itself look bearish, but essentially it's moving price from demand to supply while digging out supply, dropping it off back in demand, accepting price, and then pushing up higher to the next supply zone, consolidating at levels to build strength, and then pushing up higher. So we were in a bullish retrace of a bearish liquidation. We were bullish as long as we stayed above 66.94. I could have extended that down to about 66.87, but we ended up sweeping 94 and we hit like 93.25, right? So I was off by a point. We were bearish as long as we stayed below 64.6 or 67.16, which again I spoke about, which was the daily fib. It acted as strong resistance in the overnight session, right? Which was basically the 3 o'clock price yesterday, right? So I knew that, hey, the consolidation could be heavy between daily fib and previous day low until we broke one way or the other. You always lean toward breaking bullish because we're in a bullish uptrend at the end of the day. After making higher highs yesterday, bulls retreated back to the lows and swept the low of the previous daily candle, which is the previous day low, 66.95 or 66.9625. Again, talked about on Sunday, where we said it was a strong possibility for us to bounce literally off this level, 66.9625. We wrote it down right there, right? 66.9625, and then target 2.05% back to the upside. We again said yesterday, hey, that's probably the low of the week, but we might sweep it in order to go higher and officially make this the low of the week. What did we get? We said, okay, now we are consolidating above Friday's candle. As long as we can remain above 66.56, which essentially is the ultimate low of this swing right here, right? As long as we can remain above 66.56, longs are in play. And then I wrote in bold letters, however, if we cannot trade above the daily fib, we will remain bearish. I want to look to participate in the uptrend targeting 67.50. And then I gave keynotes about the jokes and the President Trump. So I didn't say we would be in consolidation, but I made it very clear that if we could not trade above 67.16 and we couldn't trade below 93, then what is that telling you? That means we're going to be in a range. So once you understand that, all you got to do is say, okay, I'm going to draw a line up here and a line down here and just see what happens. I'm along the lows. I'm going to short the highs. That's all you really had to do, right? And I get it, in the heat of the moment, you might not be thinking that way, but I think it's important to learn about these things, whether in hindsight or in real time. So what were we looking to do? This white box here identifies the range that we were in. The high of the range, 67.30 through 67.2125. the low of the range, 66.9625 through 67.07. In regards to a range, you want to long at the low of the range. And if we fail to break the range with a sweep, you definitely want to look to get long, targeting back to the upside. Remember, our target on the day was 67.50. We never made it up to there, but we went right to where our red box told us to look for shorts. Our 4-hour supply level, this was the same plan that was on my chart yesterday because it never got executed or it never got tapped in. Today, a perfect tap of 67.44 through 67.5650, and look to target where? The red box or the chessboard high, and then potentially the chessboard low. So the supply zone got struck. We closed the inefficiency over here, right on the nose, immediately found sellers, and then we closed inside of the chessboard high. So that plan definitely got triggered. The plan inside the lows from the low got triggered, and then the extreme plan never got triggered on this particular instrument. But as we go further down into the video, you'll see that this plan here, this extreme low, was actually in play just on a different instrument. All right, breaking down the smaller time frame, just to get an idea of how this played inside of macro time. I like to turn on the macros, right? And I like to just kind of review to make sure that we're following along with price and time. Now, if you didn't understand what was happening today, it's okay, right? This price action, although these candles have printed, right now it appears to be easy to read, but I'm a trader. I know that this can be difficult in the heat of the moment because these candles move aggressively to the downside, aggressively back to the upside. And if you're off, wrong, or late to the party, even by a little bit, when you're dealing with less than 12 points of range, you can't be wrong, right? You don't have enough room for inaccuracy. The one thing that I would tell you to deal with that is use time as your guide, or just walk away if you don't understand what's happening. When I say use time as your guide, when we're in consolidation, pick a side, literally pick a side and say, I'm only shorting inside of the consolidation. Wouldn't be my side because we're in discount. But you could also say I'm only longing inside of this consolidation. Therefore, the only thing you need to do is identify the low, which we've already identified as 66.9450. Every time price comes at or near 66.94 inside of a macro, you want to see the market trade down into these levels, right? 1025 to 1045 is a macro that I created, or it's a time frame that I've studied, right? This not outside, it's outside of the general macro of 20 minutes, 10 minutes before the hour close, 10 minutes after. It's a time frame that I've studied myself that I know my particular instrument seems to respect. And you can see we traded down into 1025. We swept the low. There's your entry, easy money buy. But where's the target? You're only targeting these highs until the market proves it can go higher. If you're on the short side and you like the traditional macro, what do? We trade up into 1050, 1110. We put a doji candle. There's your short. You short right back down to the low, right? We trade up into 1150. We push right through it. Finally, we come down into PM session. And I mean, this is like super duper saucy right here. I was asleep when this happened, or else I would have took the trade myself. This is like textbook low of day, right? This is exactly what you want to see. Trade down into 110 after a period of consolidation. And the next time we come up, you're not a scalper anymore. Now you're looking to target these highs, because what else is it going to do at the close of the day? It should be looking to go higher into our target, targeting these 67.44s. And like I said, we missed it by about a half a tick or whatever. But ultimately, the plan worked out to perfection on the S&P 500. Let's move over to the NASDAQ. Again, all of my levels that we discussed, we talk about this right after I do this market review. We're going to do a charting session. We're going to chart up the market in preparation for tomorrow. And then we're not going to touch it, right? Because the market does the same thing every day, whether you believe it or not, right? It just does. Okay. So then we come over here to the NASDAQ, right? And we look at the NASDAQ. We turn on the macro so we can review exactly where price was at. We said yesterday, if you was in the charting session yesterday, I said, I drew this big 4-hour fair value gap. I said the market is going to come back into this level, right? This level is going to be key. Why? Because the weekly fib is there. NASDAQ failed to drop lower yesterday, or as low as the S&P. So I anticipated more downside specifically for the NASDAQ to start the day so that it could then put in its low of week, right? We talked about this in the top down analysis because our levels that the NASDAQ wanted to hit, our highest point is 24,665, and the lowest point of the day is 24,721.75. So we got pretty close to where we thought price would tap into, but ultimately this was good enough. The weekly fib ended up being the target at 725. We traded straight down at 930. I mean, this was a beautiful short to start the day. And then we just had that consolidation. But look how NASDAQ plays into the macros. We trade down into 950, easy buy, right? We trade up into 1050 at the top of the chessboard, easy sell. Consolidate, come back to midnight, easy sell. Only to come all the way back down to 110, 140, right above our weekly fib and previous day low, and then instant push right into the daily settlement or daily fib and weekly settlement. These are all targets that, again, levels that we will chart out right now, right after this review is over, and we will look to trade this the same exact way going into tomorrow. We go over to the Dow Jones, which is the last instrument that I'll cover just really briefly, and we can see the Dow Jones looked extremely or just like the S&P 500, right? We turn on our macros, we see what we get, right? Anytime actually, I'm going to review one more instrument. I'm going to review RTY because there's something significant that I wanted to talk about on RTY. But we get us trading up into the macro, right? Straight up into 950. It ran the high first. That was an indication that the market was looking to go higher, right? Then it came down and ran the low, which means it created a new dealing range. Inside of the new dealing range, we had our highs here. We had our lows here, which means now all we're looking to do is long the lows, right? You can try to short these highs, but remember, the market is traveling to the upside. Therefore, it's going to be looking to run these highs. You can short after we run the highs for a quick scalp back into the structure. But what time do we get up there? Right at 950, 1010. I love the Dow for this because it always follows suit, right? We trade down into the created macro, trade up into the actual macro, 1050, 1110, come down to put the low of the day in. We trade up into 1150. We trade up to come down all the way back down to 110, 140, easy money, sweep of the previous day low, and then straight up into the weekly settlement. Very, very clean price action for the Dow Jones, in my opinion. It always is, right? It's always super clean, right? I like the Dow Jones, but I don't know. I'm in love with ES, so like I just like it over there. All right, so last but not least, I wanted to go. I should talk about gold, but it's so much going on over there. It's crazy. But RTY, what I wanted to talk about in regards to RTY is something that I talk about that I didn't really get the chart this morning because, you know, I made the plan and I had things that I had to take care of. But whenever we break through the previous day's PM session, the way that my system is set up and the back testing that I've done is whenever I see us break below these lows here, I'm automatically looking to short any rallies back up and then target these lows, right? Because essentially what this is telling me in relationship to the trend, right? If this was the high, right? We made a new low. Then we came up, consolidated. If we come back up here and fail at the PM session high, that's telling me we're trying to go lower, right? And what would be the target? This is why I always keep chessboards from the previous day that were unmitigated because they end up being targets for the next day. We trade up into, here, let me turn the macros on so we can follow together, right? We trade up into 930, which is a bearish sign, right? Anytime we see us trading up into a level that we don't break these highs, if we fail to take these highs, that's very bearish. And then when the market comes down, it's going to slam back down and try to take this liquidity here. That's exactly what it does. We get the consolidation down here at the lows, and then we finally get the reversal sequence down here at the lows in preparation for, you guessed it, 110, 140. This is the low. We came back up. We had our first tap here. We swept that low. We came up and reversed and got above these highs. That's your flip. Now you're looking for your liquidation and then your entry criteria here and or here to get the rally back up to the upside. Very, very clean price action on RTY. I mean, it finished, got up almost all the way back above the opening candle, which is crazy, but it's par for the course for RTY. Last but not least, as a bonus, we'll go over gold because this day was absolutely insane. It has been on an absolute tear. But again, My system that I preach and that I trade by, it did the same thing. We said at the close of the session, gold was in checkmate, right? So what am I anticipating out of checkmate? Either a gap up and go, or a trade down into settlement, right? Which is 38.55 too, and then a rally back to the upside. Now, I took shorts on gold, and the reason for the short was that the ATR, or the weekly projection, had been hit, right? I don't know why this is not showing my weekly projection. But anyway, what I was looking for is, if you see right here, I typed in 2.98% is what I was looking for. 2.98%. Remember that number. So all I did in preparation for taking this short is I went all the way down to Monday's low, right? Or Friday's low. Or yeah, Sunday's low. So 1800 price right here. If you take this and you rally this all the way up here, you'll see that right at 2.98% is exactly where price went. I mean, again, I can't harp on this enough, that the market is just a math equation. Once you understand the math, right, like it makes it simple. My entry was 38.96. Why? Simply off math. I drew a line and I said 2.98% is the weekly projection. I don't think we trade much further than the weekly projection, right? Which, could be soon to be a lie. But at the same time, that at night, I was drinking Red Bulls waiting on this thing to come up here, right? I said, whatever time we get up here, especially if it's like inside of a macro, 130 opening, whatever. And guess what? We came up here at 2 a.m., right? 2:30 a.m. I took the short here, got my 20 points and got the heck up out of the market. But this was just based completely off math, right? The percentage of movement in which we should be moving was hit very early on. And one of my filters for gold is I don't short it. But this was a scenario that I could not ignore, right? A 2-day push to a weekly projection equals a short for me, right? So that being said, that's all I wanted to break down. I gave you a couple extra instruments on the day. Save me a little bit of time with the Discord. That being said, this is the market review. My name is T Hobbs, and I'll catch you guys on the next one, man. Peace.